Hello and welcome to the latest investment market update. I hope that you're all keeping well and enjoying the good weather. I'm Brian Morman, Chairman of Brunsdon Financial, and today I'm being joined by Frank Atkins, Investment Director at Brooks Macdonald. Brooks Macdonald have been carefully selected to manage the Brunsdon investment funds, and using their expertise, the team analyse movements within the market and make tactical changes. Frank, the world order, as we've become accustomed to, is being constantly challenged of late. Let's talk about how these changes affect us financially. Trump tariffs, they're having quite an effect. What's your take on where this is going?
Yeah, certainly. Thank you, Brian, and thank you for inviting me on this morning. It's an interesting time with lots going on, and I'll attempt to simplify it as best I can. So if we look at why Trump has decided to place tariffs on a lot of the other global trading partners, there are sort of two main reasons why. The first is that this is a profound geopolitical shift. So what Trump wants is he wants the US to reclaim industrial and manufacturing dominance away from China. If we just take a brief history lesson, in the beginning of this century, China was admitted to the World Trade Organization. And what this did is it sort of sparked off a period of hyper-globalization where American companies were able to offshore their manufacturing operations to lower cost countries such as China. And what that did is it kept inflation low. Obviously, lower wage costs are good for lower inflation. But what it meant over time was that the US lost its manufacturing dominance, and certainly in some critical areas. And Trump wants to reclaim that. He doesn't want the US to be reliant on supply chains from China, because the US and China are geopolitical adversaries, and if tensions were to rise, then those supply chains, of course, would come under pressure. So that fundamentally is what Trump is looking to achieve. He wants to bring US manufacturing, especially in critical areas such as semiconductor technology, shipbuilding, for example. He wants to bring them back to the US. Okay, now this will undoubtedly cause short-term pain, but Trump's idea is that it will bring long-term gain. Okay, the short-term pain will be higher prices, because of course when tariffs are imposed, it means those higher prices are paid by US consumers. Potentially, if the dollar rises in value, then that will offset some of that impact. But Trump is effectively gambling on the fact that the US economy will be able to deal with some short-term pain, and that there will be a long-term gain in the future. And of course, it should be remembered that Trump doesn't have to face re-election in 4 years' time. He will have served his 2 terms by then, of course, the first being from 2016 to 2020. But because he doesn't have to face re-election, his short-term popularity is perhaps less important to him. So that's one of the reasons. Another issue that the US faces is that it needs to refinance a lot of debt this year. So the US has a very high debt to GDP, and it pays interest on that debt. Now, because interest rates have been higher, significantly higher since 2022, it means the interest that the US is paying on its debt is very high. Okay, so the US wants lower interest rates. Trump particularly, and a gentleman called Scott Bessent, who is the US Treasury Secretary, so that's their equivalent of our Chancellor of the Exchequer, they want lower interest rates. The Federal Reserve, who obviously control interest rates in the US, are concerned about the impact of higher inflation, and so they are reluctant to cut interest rates too much. And so by creating this uncertainty that tariffs have caused, potentially what that does is it drives investors into US government bonds, and that brings the yields down and therefore brings interest rates down, and in theory allows the US to refinance its debt at lower levels of interest. Okay, this is of course a high risk strategy, because it's impossible to know how other actors will react, for example. So China, for example, has large holdings of US treasuries. If they decided to sell those rather than continue buying treasuries, then that would have the opposite impact. So it is a high risk strategy, but there are a lot of moving parts, and for the short term, the only certainty is uncertainty.
Right. So specifically with the Brunsdon portfolios, how has this affected the portfolios, and which assets in particular have been more or less exposed to market weakness?
Yeah, sure. So at the time of speaking, on the 9th of April, if we take the cautious fund, that has dropped by around about 1.8%, and the Adventurous fund has dropped by around about 10%. So a balanced investor with a blend of the two will be down around about 5 or 6%. So clearly that's a significant fall. I should stress that those drops are in line with the market and what is to be expected. In terms of which assets within the funds have been most impacted, technology companies in the US have been hit particularly hard. They, of course, have performed very strongly over the past 2 years, and so they've been sitting on high valuations. And so when periods of market stress like this occur, investors will sell those sort of higher valued assets to raise cash and move into a bit more of a defensive positioning. So that is certainly one area of the portfolios that have been hit hard. More recently, i.e. as in the last week or so, UK equities have also been hit quite hard. That was really because China announced retaliation to the tariffs that were imposed by the US on it, and it opted to impose tariffs on the US. So that sort of retaliation brings concerns about a global trade war. And UK companies, particularly those large companies that you find in the FTSE 100, if you think of like Shell and BP, HSBC, Rio Tinto and Glencore in mining commodities, they're very globally orientated and they're quite sensitive to global trade. And so concerns of a trade war kicking off between the US and China are negative for those. When we look outside of equities, bonds, which of course traditionally are a defensive asset, they haven't performed in the way that many might have expected. Long dated bonds, those with maturities of sort of in excess of 10 years, have actually lost value. And really this sort of shows the concerns that many have over the impact of tariffs on inflation. Inflation is not good for long dated bonds. Within the Brunsdon Cautious Fund, we are clear and we have an underweight position to long dated bonds. We prefer shorter dated bonds because they have far lower sensitivity to movements in interest rates and inflation. And that's a position we'll be sticking with.
Okay. So, crystal ball gazing. Very difficult, of course, at these moments in time. But any thoughts on where markets are going from here?
Yeah, it's very difficult. And I mentioned that, the only certainty in the short term is further uncertainty and volatility. Trump is attempting a fundamental shift in the global order. And really what that means is it's very difficult for markets to assess who are going to be the winners and losers from this change. Change always brings winners and losers. But in the short term, it's difficult because, of course, the news is happening so quickly and, news is going one way and then flipping back the other. It's difficult to know who will be the winners and losers when this all comes out in the wash. This is why we think that it's very important to maintain a very well diversified equity strategy, not being overly concentrated in one particular region or sector. And really, it's vital not to make knee-jerk reactions in times like this. If you make large changes to the portfolios based on hunches or concerns rather than based on fundamentals, then you can very quickly find yourself caught offside. So for the time being, we won't be making any significant changes. We did rebalance the Brunsdon funds back in March. We reduced some exposure to US government bonds, as I mentioned, because of the concerns over the inflationary impact of tariffs. And within the Adventurous fund, we also took a little bit out of European equities. They have performed quite well in the first 2 months of this year, but of course Europe is bearing the brunt of Trump's tariffs as well. So we took a few profits from European equities, but other than that, no significant changes for the time being.
Okay, thank you, Frank, for that. It's a very difficult time, and also thank you for watching. As always, if you have any questions or queries, please be in touch with us. Thank you.